Bitcoin is pretty much at a critical level here in September where it either needs to bounce or, in my opinion, it could go a lot lower. Now it's trading at $57,000 and a very critical level here is the 50-week moving average. So I'm going to show that to you right now. We're going to dive into the chart and I'm going to share with you what I'm seeing and why, if this level holds, we could bounce from here, see a continuation of this bull market and potentially have an explosive next 3, 4, 5, or even 6 months where the Bitcoin and crypto bull market continues just as it has the previous 4-year cycles. Alright, so what we have here is the weekly chart for Bitcoin. As you can see over here, the blue moving average is just a 50 simple moving average. And we are now at a point where I believe it is very, very similar to what happened in 2021. Specifically here, after this correction, May, June, July, August of 2021 is potentially repeating in this same way. The funny thing is this 2021 cycle has been very, very similar to our current cycle, where we've had this entire big run up, then a peak around April, May, and a drop in 2021. Look at the same kind of move higher. So we had this massive move higher, a peak over here in March, very similar to this peak, a pullback to the 50-week simple moving average here, just like we did there, right? So for a similar length of time, this bottomed over here in about July. So we're in September, okay, a couple weeks later, but very, very similar. Similar peak, similar run up, similar length of correction, and so far, a complete bounce and support off the 50-week moving average, just like we did previously. Now you can see in 2021, this run up started in about August. We are now in the worst month historically for performance, September. Even though on average it's not too bad, it's approximately minus 4.5% that the average is down for September. So we already hit that. We retested this 50-week moving average for the second time. Okay, you can see over here, it retested it once here in the beginning of August on that scary wick to 49,000, and actually last week over here to 53,000. Now, if this is playing out, we don't want to see a weekly close below this 50-week moving average. And the reason why I say that quite simply is because look what happened previously when we lost the 50-week moving average. I'll make these in red. You can see over here, 2018 bear market. You can see over here, 2022 bear market. And the only exception was a little bit over here, the Black Swan event in March 2020. But all of these 3 times when we lost the 50-week moving average, here it led to a 50% drop. You can see over here, from the time we lost it to the lows, about 60% actually, and quite a long period of time, many, many months, even stretching all the way to a year of bear market, as you probably know. Okay, same situation here in 2022. We had a drop of 63% once we lost it. Even in 2020, even though that was a bit of a black swan event, not necessarily correlated to the markets because you all know what happened with the health crisis and the worldwide lockdowns, but you can see even when we lost it here, there was a drop of 50% below, and the only exception here was that it recovered within a month instead of being a full-blown bear market that took a whole year to recover. So we are now in a position, as you can see with the green arrows, where this needs to hold and this needs to bounce and continue higher. Otherwise, we run the risk of potential bear market and potential just an overall drop of up to 50% lower, in which the best case scenario would be 2020, where it recovers within a month but still dropped 50% below the average, and the worst case scenario is a full-blown bear market. Now I do actually think we are in the 2021 scenario at this point in time, and that has to be the assumption. As long as we are above this 50-week moving average and we do not get a weekly close below it, a wick is fine, you can see it wicks below it, it's fine. As long as we don't get weekly closes below it, as you can see over here, then the target is higher. And we can also even say that this is potentially here just a bull flag that's forming, which is just an extended period of correction after a very long move higher, which usually results in a continuation to the upside. Okay, usually this results in further upside. And then that lines up perfectly with our seasonality. We have October right around the corner. October, November are usually historically bullish months. Q4, the fourth quarter of a year, is usually also bullish. We have the US elections in November, so it's likely we see bullish continuation in these markets. And we, of course, have also the 4-year cycle where the bull market tends to peak 12 months after the previous cycle. So you can see May of 2020, and then we peaked over here April of 2021. So May of 2020 was the halving. We had our halving over here in April. So if that's going to continue once again, our peak should be somewhere potentially here in March of 2025, which would line up perfectly with a 5 to 7 month breakout to the upside, continuation higher, maybe over $100,000, and a peak somewhere around there. So basically just continuation higher, a peak, and then a new bear market sometime after that. So that's what I'm looking at right now. Basically, the main takeaway from this video is this 50-week moving average. As long as this level holds and we do not get a weekly close below, at this point, $53,000. As long as the price stays above there, no weekly close below, I think we're very close to a continuation here. We need a breakout to the upside. And keep in mind, on September 18th is the rate decision by the US, right? They're going to decide, are we going to cut rates? At the moment, the consensus seems to be that we are going to get a rate cut, so that could have an effect on the market. I'll make a video update when that actually happens. For now, this is just the key level. If there's anything you take away from this, that's all you need to know. No weekly close below 53,000, and in my opinion, the odds favor continuation from here and a run to new all-time highs, potentially still even this year. That obviously changes if we get a weekly close below the 50-week moving average, in which case I will make a new update. So make sure you are subscribed, you follow me, so that you do get those updates. I do all of this here for free on the channels. So make sure you follow, you subscribe. And if you enjoy this, smash the like button. As always, leave a comment if you have any questions or any feedback, any difference in ideas. You're always welcome to leave constructive criticism. That's always good. I do read all the comments personally. So let's see what this week brings us. Let's see what September brings us. I'm still leaning bullish as long as we're above this 50-week moving average. So subscribe, and I'll see you in the next video.